The bank says you should borrow $750,000. Should you? Fast forward on our story from yesterday to 2025, late 2025, 4 years after we decided to wait. Our income had finally grown to the point where we were in the ballpark for the price range that we wanted on our house. Our KiwiSaver had grown enough for a deposit, but here's the thing about the deposit. We had just been putting 3% into our KiwiSaver since we arrived in New Zealand 7 years ago. We never really had high-paying jobs, with neither of us being over six figures. My wife had some time off work due to parental leave, maternity leave, and I had some self-employment halfway through, so there wasn't any employer contributions. So the deposit wasn't really actually that hard to scramble together. In 7 years' time, we were able to get it going. So we sat down with a mortgage broker, again, new one this time, much better one, and got pre-approved for what I was comfortable with. My wife wanted to go a little bit higher, to be honest, but I was comfortable with what we settled on. Here's the math the broker walked us through. Banks will generally lend you around 6 to 7 times your household income with a 10% deposit. Now, there are so many variables around that statement. So if you are not approved for that amount, please don't come blame me. We're someone who have great credit. We have no debt, no student loans, 2 incomes, that kind of stuff. So we're probably on the higher end of things. If you've got other commitments or anything like that, you might be closer to 5 times your income. But roughly speaking, if you're in that kind of 7 times, 6 times your income range, you can probably start talking to a mortgage advisor. And then with the deposit, we actually ended up only using 8% of our deposit because we got approved from the King Order first-time home buyers loan. Story for another day on that one, but you can go as low as 5%, 8% was in our KiwiSaver, so we decided to just withdraw as much as we can. So that's what we did. So if you needed an $800,000 house, you need roughly $130,000 household income and an $8,000 deposit. If you're around that phrase, if you're at 77K and 120, go talk to a broker that can kind of sort that out and figure out what they can do. We spent almost a year, maybe 10 months looking at homes, attending open homes, getting a feel for what was actually out there. The amount I was willing to spend kept creeping up once I actually saw what was available in my original price range. So we spent about $100,000 more than I was comfortable with, but the quality in house, in my opinion, was much greater. So you know how it goes. You set a budget. You see what the budget actually gets you, and suddenly you're thinking, maybe we could just stretch it a little bit more. So my original plan was to have a lower loan, pay that sucker off in 7 years, and then upgrade, but the quality of houses just wasn't there. So we decided to go a little bit higher, but we're going to stay in it a little bit longer, if not for the entirety of our kids' childhood. We'll see. So this is where most people get themselves into trouble. The bank says you can borrow a certain amount, so you borrow that amount, because if the bank says you can afford it, then you can afford it, right? I think that's wrong. If the bank says you can borrow X dollars and you borrow X dollars, you are signing up to paycheck to paycheck. By definition, that's what you're signing up for. Here's what you need to do before you even start looking at houses. Figure out what you can actually afford, not just what the bank will lend you. The bank's calculation is based on whether you can make the minimum payments without defaulting. That is it. They're not thinking about whether you can still go on holiday, save for emergencies, or have any kind of life outside of servicing the mortgage. Sit down and do this math on your own. Look at your current expenses, add in rates, insurance, maintenance for the house. These are all online, basically, and a little buffer for life happening, and then see what mortgage payment fits into that. That is your real budget, not the bank's number. I watched my budget creep up as we looked at houses. I had to keep pulling myself back and asking, what can we actually live with? Not just what can we afford on paper, but actually live without feeling strangled by it. Know your numbers before you start looking, write it down and stick to it. Or at least know when you're choosing to go over your numbers and why.